Well, everybody who owned assets yesterday was a genius. But today, only those holding gold can still make the claim. Yeah, it's true. The profit taking has come in. You can't have a run up like yesterday and expect necessarily that the run up is just going to continue on. It's impacting everything, including Tesla. It's off this morning after the huge gain yesterday, and that's not a shock to me. I'll be happy with $410 a share on January 31st because I'm confident that if it's $410 on January 31st, it's going to be 700 plus by the end of the year. Markets give and markets take back. Today is a profit-taking day. Even the bond yields are back up again, meaning bond values are down. So like I said, except for gold, all asset classes are down this morning. There's a flurry of reports out this morning regarding the economy. None of them are shocking or terribly out of line with expectations, except maybe in a good way. I didn't see anything yet that should shake up the markets. Yeah, I mean, I would say most of them are actually good. Philadelphia Fed, we'll talk about that, is very good. On the manufacturing side, although, we had the offsetting New York manufacturing's information the other day, which was not good, which is in the opposite direction. But everybody is optimistic, and that's really super key. If there's optimism, generally that does move into people starting to make decisions based on optimistic outlook, and that helps the economy. Anyway, there's 9 reports out this morning. If you're ready for that, I'm sorry. But, if you really want to have a sense of the underlying economy, and I think the folks that watch my program, you do, I find it's critical in my own analysis to add as many data points as I possibly can with regard to the general economy, which helps me understand the macro, which helps me understand Tesla, auto sales, et cetera, et cetera, et cetera. So anyway, I don't want to just rely on the CNBC talking heads to tell me what their analysis is of the numbers. I go in and get the raw numbers. I report the raw numbers to you in most cases. Sometimes I'll give you an analysis if I think it's better or smarter than or easier to understand than the raw numbers were on any given day. As you'll see today, I think it's 100% raw numbers. And then I'm not getting the bias of the talking heads on CNBC. By the way, I'm also biased, which is another reason that I prefer to give you the raw numbers. When I say biased, I just mean, I'm an optimist and I am going to give you an optimistic view. Okay. That's just a fact. If that's not what you want, or if you want to find somebody that's a pessimist or a so-called realist, to balance me off, that might be even a smart idea. Anyway, I'm not intentionally biased. I'm just saying we all have them. So we will, give those reports here in a minute. Now, how about we're going to start out this morning with a good laugh. So this is Goldman Sachs this morning. It says, looking ahead, they anticipate that Tesla will initiate its robotaxi business in the second half of 2026. That's good. And they're projecting revenues of approximately 115 million in week 1. No. In 2025? No. In 2027. I'm thinking this has got to be a typo. There's got to be something wrong here. Let me know in the comments below if you've seen anything that would suggest that maybe they figured this out and they've revised it or something. $115 million in 2027. Maybe $15 billion in 2027. $100 billion. Maybe they just meant billion instead of million. That must be it. Anyway, this new venture is expected to be roughly neutral in terms of its impact on Tesla's consolidated earnings per share. Neutral. Are you ready for that? Okay. All right. The range that I have been predicting on this channel for the last 3 weeks, between 380 and 480. Do you remember me saying that over and over again? Well, here's Barron's this morning. After the election, shares of Tesla traded all the way up to 479.80, a new all-time closing high, before dropping 21% to 379.28 on January 2nd. Those prices, 380 to 480, are reasonable limits on Tesla's new range. Both numbers are much higher than the 270 resistance investors live with for much of the past year. That is the good news. All right, and the other Tesla news this morning, Tesla has a new patent for an LFP battery. As the limiting factor said when he reported this, this is not so shocking or surprising, but worth reporting. This is Randy Kirk. You could hit the like button, the subscribe button, the notify button. Notify why? Because what we got coming up today would be Cern Basher at 7:45 tonight. And just a couple of hours before that, around 5 o'clock, will be Bradford Ferguson, who you guys seem to be getting to really like more and more and more. His numbers, the numbers on the Thursday night show are just continuing to climb and climb. So thank you for that. You could hit, of course, you could always go to Patreon. That would be a very smart thing to do. You want to make sure that I keep doing this show because you're making money as a result of the show. And the way that you'll make sure is by, giving me a pat on the back. Do you know that employees like a pat on the back even more than they like money? I know. I've been reporting that in all of my books for the last 40 years. Employees would prefer to have the employer come over and say, "Great job, Randy." So put that down today if you want. But if you want to just go a little further, you could join Patreon. In the week ending January 11th, the advance figure for seasonally adjusted initial claims was 217,000. Boy, does that sound just like normal? 201 to 240, right? See, that's the kind of thing I start to get in my head. After 2 years of doing this every single day, I now know what the range is in this particular, economy. It's, 200 to 220, 40, somewhere around there. So 217 is like right in the middle of the range. That's an increase, however, of 14,000 from last week, which is a low week of around 203. Well, here's the headline out of that. The total numbers of continued weeks claimed for benefits in all programs for the week ending December 28th was 2,200,000, an increase of 327,000 from the previous week. This is the place where this is what I've been telling you, for probably the whole 2 years. This is the important stat each morning. These are the people that are continuing. They're not getting a job. They've been laid off. They've quit, whatever it is. They're trying to find a job and they're not finding a job. That's the number we want to look at. And that is a little bit disturbing. Retail sales for December were up 0.4% after being up 0.8% in November. So people front run Christmas maybe this year. Total sales for the October 2024 through December 2024 period were up 3.7% from the same period a year ago, 3.7%. The October 2024 to November 2024% change was revised up 0.7%. It was originally at 0.5%. And total retail sales were up 0.8% during that period. And that was a 4.2 gain from last year. Motor vehicles and parts dealers were up 8.4% from last year. That's a good number. Non-store retailers were only up 6%, which is a good number too, but not as good as the Walmart. What's that called? Amazons of the world. How can I forget Amazon? I make some of my money off of Amazon. I buy half my product from it. Anyway, all right, Amazon. That's the name, Amazon. U.S. import prices increased only 0.1% in December, which was also the number in November. So prices for U.S. imports increased 0.1% in December after rising the same. I just said that. U.S. export prices advanced 0.3% in December, following no change the previous month. And over the past year, import prices increased 2.2%. That's a good number. And export prices, 1.8%. So Fed would like that. The import-export business doing good. In sharp contrast, we're going on to the Philadelphia Fed is the next story here. In sharp contrast to the Empire State Manufacturing Index, which was very soft. I think that was yesterday, the day before. Manufacturing activity in Philadelphia region increased overall, according to the Business Outlook survey. The survey's indicators for general activity, new orders, and shipments rose sharply, reaching multi-year highs. The employment index moved higher and continued to suggest increased levels of employment overall. The price index indicated overall increases in prices. That's not good. And both indices rose above their long-run averages. So the prices increased part also rose above long-term averages. The survey's broad indicators for future activity rose, suggesting more widespread expectation for overall growth coming up in the next 6 months. So what's going on in Philadelphia? And what's happening to New York? Why is Philadelphia just on the road? Okay, these are big regions. Oh yeah, that. Okay. So the Rust Belt is doing pretty well right now. And the manufacturing in the Northeast, not so great. Okay, all right. I'm not sure what's going on. Federal Reserve Beige Book report came out yesterday afternoon. I forgot to report on it. I don't know. The session that I had with Jeff Lutz yesterday was so good that I don't think we would have had time to go into the beige report. So anyway, here's the beige report. National survey. So we just talked about New York. We talked about Philadelphia. Those are 2 of 12 sections of the country that the Fed surveys, and they do this every 6 weeks. So here's the beige report. Number 1, economic activity increased slightly to moderately across all 12, there it is, Federal Reserve districts in late November and December. Remember, this is 6 weeks. This is a survey. This is Randy talking. So impressions, these are impressions, not statistics. Number 2, consumer spending moved up moderately with most districts reporting strong holiday sales that exceeded expectations. Vehicle sales grew modestly as well. Consumers make up about two-thirds of the economy, and the Christmas sales were good. Number 3, construction activity decreased overall, with several districts indicating that high costs for materials and financing, of course, were weighing on growth. Manufacturing decreased slightly on net, and a number of districts said manufacturers are stockpiling inventories in anticipation of higher tariffs. Now, what are they saying there? Okay, they're stockpiling their imported things. So if they're importing raw materials in order to add those imported items to their manufactured products in the United States, that's what they're stockpiling. All right. Manufacturers have been in recession. This is Randy speaking. Manufacturers have been in recession for over 3 years, and while there is optimism among the group, and there should be pent-up demand for durables, time will tell if this helps the economy in 2025. This is where I've been completely wrong. I've been predicting an increase in durables for the last 2 years, and it just hasn't happened. So, as you've heard me say probably many times before, that refrigerator is getting older and older. That hot water heater is not doing well. People are holding on to them because they don't want to spend the money for them right now. Anyway, we'll see if this is the year where they need to pop for that refrigerator. Number 4, residential and real estate activity was unchanged on balance. Mortgage rates continuing to hold back demand. Commercial real estate sales edged up. So this is Randy again. Here's my thinking about that. The residential side has so little inventory. Still, even though the inventories are way up compared to what they were a year ago, it is winter, which is the off season. That is doubtful that high interest rates are going to hurt those sales in 2025 any more than they have in prior years. However, this category has been in recession for a decade, and there's no clear way out. Although Trump has suggested allowing building on some government-owned lands, which might cause builders to say, okay, let's start some really brand new communities in some places that we were unable to think about in the past because it's federal land. So commercial real estate, on the other hand, could improve with the back to office movement, including the federal government maybe having a back to office movement. It is a little I would say way too soon to know for sure about that, but it could help a lot, and they need the help. Number 5, the non-financial services sector grew slightly overall, with districts highlighting growth in leisure, no kidding, and hospitality and transportation, notably air travel. Okay, what's happening? The old folks are traveling. The 55 and older group, they've got money. They've just made a fortune in the stock market last 2 years, up 20% year after year, 2 years in a row. Their houses have gone up in value. Everything that they're touching, the old folks have all this money and they're spending it, okay? Then they said truck volumes, however, were down. Financial services providers reported modest growth in lending with little change in asset quality overall. Lenders and community organizations voiced concern about delinquencies among small businesses and lower income households. Lower income households. Lower, keep saying it. 100,000 and under group. Nonprofit social service agencies faced high demand amidst uncertainty about future funding levels. So truck freight is stuck until manufacturing picks up. You can't move the atoms if they aren't making the atoms, and they're not going to make them if people ain't buying them. So it's been a recession. The trucking industry has also been in recession for 3 years. The outgoing Biden folks that are just pumping and pumping about how great Biden was, they're pumping because, okay, government did really well. Healthcare, which is kind of government now, did really well. Tech did really well, especially the Magnificent Seven. But housing and manufacturing and small business and trucking are all in recession, practically the entire Biden administration. Smaller banks, and that means the under $100,000 a year folks who work in manufacturing, who work in building homes, who work in trucking, and who work in small business, those under 100,000 people, they're the ones that are suffering, and that is why there's concern among the local banks. Agriculture conditions remain weak overall, with generally lower farm incomes. There's another group, and weather-related struggles in some areas. The spread of the avian flu, reduced egg supplies, and purchase. Those are up. So beef and eggs. If you want your steak and eggs, you're going to pay a lot of money for it right now because the beef industry is suffering from some drought problems, and of course, we know what's happening with eggs. But these are transient. These are not inflationary. That's why they don't count them in the core numbers. Number 7, more contacts were optimistic about the outlook for 2025 than were pessimistic about it. Though contacts in several districts expressed concerns that changes in immigration and tariff policy could negatively affect the economy. So I'm saying that this is stated in every single report. Everybody's excited about the new economy. Everybody's worried about the immigration reversal, if you will, and they're concerned about the tariffs. And as I've repeatedly said over and over and over and over and over again, these things cut both ways. I'm sorry. If you're exporting people back to South America, Mexico, Central America, or around the world, and you're saying more people are going out than are coming in, that is going to have a positive impact on inflation because they're not going to be chasing those goods. It'll have potentially a negative impact on the economy. Absolutely true. Tariffs, they could have a one-time impact on inflation, not an ongoing impact on inflation, but those same tariffs could mean that businesses in the United States get more business, which could create a positive in the economy. Nothing that they're talking about is only one direction, but when you get people looking still at the old news, the people that don't have a clue about nuance, then you're going to get this information that is skewed towards slamming the incoming administration. If Biden was putting in these tariffs, they'd be like all for them, talking about how great it's going to be for the U.S. economy. All right, breaking. The 9 reports, here's the 9th one. Builder confidence in the market for newly built single-family homes was 47 in January, up 1 point from December. I was a little surprised by this. I didn't think that it would be up. Here are the readings from the 3 HMI indices in January. Current sales conditions rose 3 points to 51. Traffic of prospective buyers posted a 2-point gain to 33. Sales expectations in the next 6 months fell 6 points. See, this is the part that I was thinking would happen, but I don't think it's for 6 months. They're asking the wrong question because you're in the middle of the winter season. March 15th, April 1st, that's when sales pick up. So in the second half of this 6 months, I doubt if these people are that concerned. The latest HMI survey also revealed that 30% of builders cut home prices in January. This year was stable, same as it's been. Meanwhile, the average price reduction was 5%, same rate as December. The use of sales incentives was 61%, same as, all right. So no real changes, any of that. Housing is in recession. It continues to be in recession. When it breaks out, when manufacturing breaks out, that'll help trucking. That'll help small business a ton. All of those, that's where Trump should be concentrating. If he wants the economy to really get going fast, well, he is tariffs and and hope maybe opening up some federal land for building. The key to the manufacturers and home builders and small builders is get those people on the train. Then we can have a truly robust economy helping the under 100,000-year folks. That is, of course, not the report. That was me. Now, the markets this morning were sad. Let's go see if they're still sad. We've got, yes, they're still sad. So we've got Tesla down $13.38. You got the Dow down 96, NASDAQ 44, S&P down 5. Not that sad. This is a little bit of a peel back from yesterday's numbers. Let's look at those percentages. You've got the Dow down 0.22, the NASDAQ down 0.26, S&P down 0.12, and Tesla down 3. It was way up over compared to its beta yesterday at 8% compared to the NASDAQ 2.5. So this morning, it's not surprising. It is down more than its beta, in reaction. But you've got, listen to this. I got Apple down 2, Google down 0.69, Amazon down, Meta down, Microsoft down, although at 0. Microsoft down 0. Actually, just switched to positive, as did NVIDIA. So maybe we're starting to see a little bit. Yep, we're starting to see a little bit of a trend upward. Not for Tesla. Tesla is still down with no little. But we'll look back in a couple of minutes and see if that's changed. All right, and the Cathie Woods are mixed. They're about as mixed as they can be, trending slightly negative. All right, but very small amounts, except for TDOC again. I don't know what's going on with TDOC. Okay, and Square is actually up. PayPal also. Interesting. All right, let's go look at bonds. What we have with bonds this morning, up 2.5 basis points to 4.639. Again, compared to 4.8, I'm loving it. It just changed in front of my eyeballs. Up 1 point, I'm sorry, down 1 point down. Man, that was a big switch. So sorry, I gave you the right number, 4.639, but this has flipped. That could flip the market. So now we've got U.S. 10-year down 1.4 basis points. So it hadn't refreshed, I guess. The 2-year down 0.9 of a basis point. The 1 month down 0.1 of a basis point, basically unchanged. So this is very good news. 4.639. Let's see if the market may respond to that. So apparently the bond market looked at those 9 reports that I just went over and said, this looks okay. Yeah, that's what the bond market's telling you this morning as it continues to sell off a little bit. To rally a little bit, which means the yields come down. All right, let's look at oil. It had been off a little earlier. Let's see, it still is. 78 cents, back under $80 for Texas Intermediate. That's a good trend. Also, Brent down 66 cents at 81.37. That continues to only be a little over $2 difference there, suggesting Middle East peace. And of course, we know we have those Trump-inspired peace accords that are happening this morning, happening yesterday, and are supposed to start taking effect this Sunday, the day before inauguration. Just a coincidence, though, that Trump said they better figure it out before he was inaugurated, or there was going to be, I think he said he was going to unleash hell. Anyway, natural gas up again 0.86% this morning at 4.117. Gold is that one commodity which you could have held both days and done well, 27.48. That is nearing the all-time high. It is the 1 month high, but I think it's getting close to the all-time high. Silver also up 0.77 at 31,775. And copper up 1% at 4.436. You've got the dollar this morning ruling, at least for now. And you've got Bitcoin down 1680, back under 100,000 at 98.3. All right, so that is the Bank of America's earnings came out. They top estimates. So that is going to be a good thing, probably also helping those bonds. And I don't see any of the other banks. There's like 5 banks reporting this month. Target says holiday sales were better than expected, but profits were not. We'll have to look into that later. Okay, let's go ahead and check back all right. So what do you got later today? Say it with me now. We got Bradford Ferguson at 5 o'clock about, and then 7:45, you've got Cern Basher, which you all love Cern, and he does such fun things. And then what else? You need to hit like, subscribe, and notify, and you need to join Patreon, not necessarily in that order. Maybe join Patreon first and then come back. Anyway, and then okay, and then let's go back and take a quick look at where Tesla is since we just reported it a couple of seconds ago. It is still, now we better make sure that it's not refreshing. It's down 3.14%, which in dollars is 13.45 at 414. As I said before, I'll be happy. Won't you? Wouldn't you be happy on January 31st if it was 410? Yeah, would you be happier if it was 510? Of course. I'm just saying, compared to where we thought it was going to be, well, compared to where the world thought it was going to be, 410 is phenomenal. I said 410 on January 31st. Brian Wang said 450 on January 31st. I wouldn't be shocked if it's in between those two, but I'm hopeful that Brian's right in a way. In a way, I want to be right. Okay. Anyway, I think I'm done. I think you guys are probably done with me too. See you later today. It has been great talking to you.